Hello, welcome back to How About That Crypto. You are watching your daily crypto news and updates with your host, Bitcoin Stylist on Twitter and Bitcoin Hairstylist on Instagram. I'm here Monday through Friday, and I explain crypto and Web3 while keeping you up to date on all the latest. Today's news stories are: the mainstream financial system is now giving you loans for your Bitcoin. That's right, you can now take a loan backed by your Bitcoin. And almost at the same time, the SEC almost doubles the size of their crypto enforcement unit. And the last story is Edward Snowden is behind a privacy coin. What does all this mean? Not to worry, I will explain it all. But first, if you like or don't like the content, please let me know by leaving a comment below. If you're listening on podcast, please give me 5 stars and follow me. If you're watching on YouTube, please smash the subscribe button, ring the bell. It helps support the channel, and it doesn't cost you anything. Just to be clear and litigious, this is not financial advice. This is for entertainment purposes only. You can use the links below to do your own research. So, Bitcoin-backed loans have been around for a bit, but this is the first time an establishment and financial institution has issued one. Robert, wait a minute. What do you mean Bitcoin backed? Okay, good question. This is called collateralized or over-collateralized loan. This means that you give the lender something that is worth more than what you are borrowing. If you've ever heard of a HELOC or a home equity line of credit, this is a loan that you guarantee the loan repayment by putting up your house as collateral. So basically, if you don't pay the loan, the lender takes your home. In the case of today's story, this means that the lender would take your Bitcoin if you didn't pay your loan. Let's talk about why this is important. But first, let's look at our first article of the day. Author Muayo Shin reports for Bloomberg. Coinbase is on the other side of Goldman's first Bitcoin-backed loan. Crypto exchange owned $183 million of Bitcoin at end of 2021. Terms of the lending facility haven't been disclosed. So I'm just going to read a little bit of this for you real quick. Goldman Sachs Group Inc.'s first ever lending facility backed by Bitcoin is the latest effort by crypto exchange Coinbase Global Inc. to bring money from the Wall Street to the digital asset space. So Goldman Sachs is one of the largest financial services company in the world, and definitely one of the biggest in the US. And Coinbase is the largest crypto exchange in the US, publicly traded in the US. All right. So basically, Coinbase, the crypto company, took out a loan from Goldman Sachs and they put up their Bitcoin. All right, continues on. Coinbase's work with Goldman is a first step in the recognition of crypto as a collateral, which deepens the bridge between the fiat and crypto economies. Head of Coinbase Institutional said in the email response, Coinbase did not provide further details about the loan. A spokeswoman from Goldman Sachs said last week the loan was collateralized by Bitcoin owned by the previously undisclosed borrower. So I think this is some important stuff right here. Goldman has to think that the value of the Bitcoin has a floor. Like if they thought it was going to go to zero, would they still make the loan? I don't know. Would they? Let me just pull that up for you watching. Yeah. So would they even make the loan if they thought Bitcoin was going to go to zero? I don't think so. Do you think so? The bank. So let's just kind of talk about this for a second. If the bank gave me a line of credit on my house because they believe my house will maintain a certain amount of value, well, Goldman Sachs must appreciate the underlying value of Bitcoin. That's right, the underlying value. What's behind the value of Bitcoin, everyone always asks. Well, something must be behind the value of Bitcoin if Goldman Sachs is giving out loans and letting people use their Bitcoin as collateral. Because here's what happens. You can't come after me if my loan doesn't go through. You just take my collateral and then our relationship is over. It's not like I still got that loan on me. So, or maybe not. Maybe the terms of the agreement is yeah, we'll take your Bitcoin, but if that doesn't cover it, we're still coming after you for the difference. I mean, that could be, but we don't know the terms. But at the same time, they still have to consider it has value. That's why this is so important. So what type of value is there in Bitcoin? I don't know. Maybe faith in something not controlled by one entity, aka governments and central banks. Faith in the only truly finite asset after land. Faith in the most liquid finite asset on the planet. I could go on, but you get what I'm saying. Now let's go back to the story. So Coinbase has 183 million US dollars worth of Bitcoin. Typically, when other institutions have given crypto-backed loans, they do a 40 to 60% loan to value ratio. This means that they want more crypto than they will give you dollars. You might have to put up $100,000 worth of crypto, but they'll only give you $40,000 a loan. And that's because the price of Bitcoin is volatile. That way, if it breaks down and it goes from 100,000 to say 60,000, then the bank still has a little buffer right there. Okay, and check this out. I want to read something else from this for you. These types of bilateral agreements are rarely done in a vacuum. It is far more likely that Goldman is seeing a lot of demand for this type of transaction and is just testing the waters before making a bigger splash. Goldman told Bloomberg previously that the deal was interesting to the bank because of its structure and 24-hour risk management. The bank also traded its first over-the-counter Bitcoins option in March, which I reported on. And other Wall Street banks like Jefferies Financial Group have also started experimenting with crypto-related products and services. Goldman Sachs is by far the most mainstream establishment, big money Wall Street firm that is doing this right now. They made a derivatives trade, meaning they let someone bet on Bitcoin through an options trade that they set up, and now they're giving out loans and letting people put up their Bitcoin like they're putting up their house for loan. I mean, this is a big deal. What do you think? What are your thoughts about this? Do you think I'm blowing this and hyping this up more than it should be? Please leave a comment below, and moving on. Okay. So while this is all happening, the SEC, there you go. The SEC is ramping up the resources to tackle the crypto market. Author Corinne Faith reports for The Verge. SEC nearly doubles crypto enforcement unit, citing fraud risk and booming market. The renamed Crypto Assets and Cyber Unit will also investigate DeFi products and NFTs. I've talked about they're going after DeFi. They rewrote all these rules. There was like tons of pages. They didn't give anybody any time to actually review them. The SEC is just trying to like grip onto something that they're having trouble getting a grip on, basically. Let me read you a couple of things. All right. The U.S. Securities and Exchange Commission, or SEC, announced Tuesday that it will close to double its cryptocurrency enforcement division, adding another 20 positions to the Crypto Assets and Cyber Unit, which has been newly named that from the Cyber Unit. The total number of staff will rise from 30 to 50, increasing the agency's ability to prosecute securities laws violations related to new crypto products. In a press release, the SEC cited a booming period for crypto markets and a corresponding responsibility to keep investors safe from the growing risk of fraudulent investment schemes. Basically, this is saying the staff is going from 30 people to 50 people as a result of the crypto boom. And along with the crypto boom is more crypto fraud. I would actually agree with that. All right, continuing on. Crypto markets have exploded in recent years, with retail investors being the brunt of abuses in the space. Meanwhile, cyber-related threats continue to pose existential risks to our financial markets and participants. The bolstered Crypto Assets and Cyber Unit will be at the forefront of protecting investors and ensuring fair and orderly markets. Good luck. What do you think about this? I think the SEC has kind of been doing a jokester job on all this. Like, there seems to be a lack of clarity in the steps that crypto companies can take. There seems to be no rules written for a company that can issue a security that turns into a commodity. There is not one rule on the book, not one. And they're trying to, it's just, the whole thing is a joke. Like, we really need an act of Congress here, in my opinion. What are your opinions? Do you agree with me? Do you disagree with me? Do you love the SEC? Please leave me a comment below. I would love to hear from you. I would love to hear from you if you agree with me also, but definitely if you don't agree with me, please leave a comment below. And moving on to our final story. This one's interesting. I don't know how important it is. I just thought it was interesting. And so I wanted to bring it to you. It is an update in our industry. So speaking of enforcement, let's talk about Edward Snowden and a privacy coin. So what is a privacy coin? A privacy coin is something that you can't track. Like I've talked many, many times, All the other cryptocurrencies are open ledgers, which means what? It means they can see every single transaction. Well, in a privacy coin, it jumbles up the movement, so it's harder to track. And Edward Snowden, everyone knows Edward Snowden. If you don't know Edward Snowden, then I suggest you look his Wikipedia page up and maybe watch one of the movies about him. But he's a big time whistleblower or treasonous, depending on who you talk to. So anyway, author Taylor Locke reports for Fortune. Edward Snowden says he's the mystery man involved in the creation of leading privacy currency, Zcash. So I'm just going to read a little bit from here. Back in 2016, 6 people played a key role in the creation of cryptocurrency called Zcash. One of the 6 participants, who operated online under the pseudonym John Doberton, remained unknown until now. Edward Snowden, the former National Security Agency consultant and notable whistleblower, according to Fortune.com, revealed himself in a leaked video from Zcash Media, a group making educational videos about Zcash. I saw Zcash being worked on by a number of trusted academic cryptographers, and I thought it was a very interesting product. So what do you think about this? I thought this was very interesting. And the question is, like, how is he involved? Well, in 2016, Snowden agreed to participate in what's known as the ceremony, which created the Zcash blockchain so-called trusted setup, or the parameters required to create zero-knowledge proofs for Zcash private transactions. The ceremony has been talked about within the crypto community for years, like a sort of folklore, although it was not known until now that Snowden was part of it. So basically, this sounds to me like he was just part of this trust setup, which was they picked 6 people and they gave each one a key. They broke the key into 6 parts and they asked everybody to destroy them. I don't see how that's involved. I mean, if more information comes up and he was like part of coding it or deliberations or I don't know, but it sounds to me like it doesn't sound like he was, I don't know. It doesn't sound like a big deal. If you have other information, please leave a comment below. I just love seeing Snowden and a privacy coin teamed up. It's like 2 peas in a pod, you know. Anyway, what do you think about this? Let me know what your thoughts are. Please leave a comment below. Please like, subscribe, follow, rate. It helps support the channel. It doesn't cost you anything. I know today was late, but I got it in. I'm going to be here every day, Monday through Friday. I will see you all tomorrow. In the meantime, hodl on.